Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, January 30th, 2023. It's now the 28th. We start off in the S&P 500 daily chart in DeMark looking back to the end of December 2021. I'll zoom into the current area now. I've recently started showing all the ongoing supply and demand lines. I'll turn those off now. The S&P 500 daily chart has printed the combo and sequential sell setup 5 count, and to end that for end of day Monday the 30th, there must be a close below 40.16.95 for the price flip to the buy setup count 1. And the sell setup count is more than halfway to the 9 sell setup end count. So I start becoming a little nervous now. Stay above that close for Monday, and we print the 6th. On Tuesday, stay above that close, we print the 7. And on Wednesday, stay above this close, and we print the 8. And on Thursday, stay above that close, and we print the sell setup 9 end count. All that in a perfect world. And the relative retracement disqualified up 1 remains disqualified, as it did not get the confirmation bar. It would have needed to open higher than this close. And there's not too much to the downside to qualify except for the trend factor down 1. The momentum down is quite far away, so it would need to close below that to get that level qualified, along with trend factor down 2 and trend factor down 1. So maybe we could get a pause in this area. As long as it stays above the relative retracement up 1, there's a better chance of eventually getting that qualified and confirmed. The 50% qualified and confirmed propulsion exhaustion up was tagged, and price for this high on the 27th came really close to exceeding this high on the 13th, and that would have given us the wave 5 print for the up wave. So price is really close to making a higher high. And interestingly, the combo sell countdown 10 printed over here, 9 and 10, and it left off with the 8 over here on November 23rd, so it's picked that back up. And let's wait for the 13 sell countdown to print, and then maybe it will look like this, where we had that lone sequential over here and then a huge downdraft. So let's see what happens if and when it prints that 13 up here. And as I mentioned in the previous video, the buy TDST level is very close to the high over here where the up wave 5 would print. And the cloud conversion line is nicely above the baseline, and they're both taking an upturn, so that's good to see. Conversion line is right before this ongoing demand line, so there's a little protection there in case it wants to try to get under that. And now we'll take a closer look at the lines. I'll turn everything else off. And as suspected, this ongoing supply line was disqualified, as it did not have a higher range for this day than it was on the 26th, or it could have opened above it, and it did not do that, so this was disqualified. I moved the screen down a little bit to see that the qualified supply projection was printed up here at this level, pretty much right on top of DeMark's wave projection for up wave 5, and that's from this supply line here that was qualified and not quite confirmed. It would have needed to open higher than this close on the 26th. It did tick higher and closed more than the close on the 26th for this bar on the 27th, so that's close enough to have printed this supply projection, but it is not confirmed. It's still just qualified, so anything can happen. And now it's the same situation for this ongoing supply line, in the fact that if it does get above it for the 30th, it would need a higher range than this bar here. So the true low is the low of this bar. Just subtract the high from the low, get the range. So it needs to have a higher range above that and close above this supply line here to qualify it. Or again, if it opens above this level, actually, here in the big board chart, you can see the supply line parameters here. So it needs a range higher than 45.51 or open more than the line plus close more than the line. So, and that level for the line is at 4092.21 for the 30th. Surprise us to the downside for Monday and get below this ongoing demand line, this one too, and this one. So think about it, all three of these would become confirmed, but first things first is this ongoing demand line, and that level for Monday on the 30th would be approximately 3991.78. And I've turned all the other indicators back on for one last look. An S&P daily chart with Stark bands and Bollinger bands, and I noticed that when the upper Bollinger band and Stark band become close together like this, that it precedes a pretty serious downtrend. So there's one there, another one here, one sideways a little, and then a precipitous drop over here, right together, huge drop, right here together, another huge drop, again right here, not exactly touching, but they were here, and not too big of a drop. So it really shows the big huge drops when they become together like that, right on top of each other. So right now they're not right on top of each other, but awfully close. The Bollinger band is right underneath the Stark band, and then of course the Stark band will always be moving up, and the Bollinger band will be chasing it. And the NYA top color chart, NYA to SPKX ratio, basically value versus growth, is as suspected, making a run down to the top of this ascending triangle that value broke out of. So growth is making a run for the top of that, and the junction of the lower line of the ascending triangle is right there too in a junction. So hey, if it breaks through that, then it's down to here. And the New York AD line has broken out of its descending broadening wedge to the upside. The ratio adjusted New York McClellan breadth oscillator is forming a nice complex pattern well above zero. Complex meaning up and down like that, well above zero. And NYA price is knocking at the door of this support and resistance line here around 16,000. So there was a high of about 16,025 on Friday, so that must be where that green line is at, right at 1625 or 26. And the ratio adjusted McClellan volume oscillator is starting to form a complex pattern up and down here above 0, not as nice as breadth. And the ratio adjusted summation index of the ratio adjusted McClellan breadth oscillator is well above 500. It's fast approaching 900, so we're higher than that big June run here, and that's pretty good to see. So it looks like the ratio adjusted McClellan summation index for volume here, based on its ratio adjusted McClellan volume oscillator up here, is well above 500 too, fast approaching 800, higher than that big June run. So now there's room to work with it to the downside. You can read about it here, getting above 500, and then now we look for it to turn around and head back down to 500 and stay above it. Something like this over here, where it came close to 500, bounced up, went under 500 here a little, and bounced up. Same thing here, you get the idea. So that's what we're looking for here and here on volume. So if you've been following along and buying low, you would just sit back now and wait to see what happens. If it rolls over, don't panic until it gets under 500 here. And RSI 14 is knocking at the door of this 65 positive green line again. Looks like it got turned away a little. Let's see what happens there. And the on-balance volume has broken above both of these support and resistance trend lines here, and is above its 21 EMA signal line. That's looking pretty good. A lot of participation. And the New York stocks only AD line did break above its downtrend line here, and is moving solidly up towards this arrow here. And the McClellan breadth oscillator for the New York stocks only AD line is not doing that much. So it needs to skyrocket here and start bumping this up till it gets an upward trajectory like this. Until then, we are in a possible bearish divergence. However, the New York AD line would need to hit this arrow here to confirm the bearish divergence still, as it was back here. So if we just shorten that arrow, go right to here, stop it right there, that was the bearish divergence, and will be confirmed again if and when it hits this arrow here for the AD line. And the intermediate term volume oscillator for the NYA has a pretty good chance of exceeding this peak here for a new high. It's pointed straight up, and same thing with breadth, which is just about there now. So we're almost to a higher high. I'm going to move this line here right up to that peak. Stand by. And I moved the line up to the top of this peak, and breadth is knocking right at the door of that. It would be great to see a higher high there. So there's gobs of breadth coming into the market there. And the instruments above their 200-day simple moving average in the NYA is moving fast up to the 70 line. It's well within the 60 to 70 line, and that's good to see too. I would take sideways action for a while here. The CBOE total put call ratio chart has started working again after failing most of 2022. We'll go over that now. And first, in a perfect world, where on the KST down here, where it peaks and starts to go under its signal line in red, you'll see a valley in the S&P 500, and then as the KST continues to go down, price in the S&P 500 continues to go up, so it's an inverse relationship. And you can see in 2022 there were a few instances of it not working and was just getting too frustrating to follow. Here you see a peak right when the KST goes under its signal line, and that was at a peak up here, and price went down as the KST went down, so that's a fail. Same thing here, and the same thing here. And when the peaks are signified by solid or dotted lines here, that means that the peak, when it's solid, happened above this line here. And when the peaks happened in dashed, that means the peak for the KST happened at or under the line here in blue. So currently, for 2023, you can see the peak here where the KST started going under its signal line. Nice valley here, and a move up in price for the S&P and a move down for the KST, and it's gone under these similar valleys here from 2022. So usually we wait until it gets under this solid horizontal line here and then starts hooking around and going back up, and then you can see that price will go down in the S&P 500 when that happens, but we're really paying attention to the upper peaks. And it does happen before this solid blue horizontal line here, like here and here, but this one has a lot of momentum, so I expect it to get at this horizontal line here, maybe go a little under and then hook around back up. The S&P VIX, looking back to 2019, December, November, and you can see this blue line goes this way, and we're fast approaching it in the current action now. So I'll zoom into this area and turn everything else back on. And the VIX closed right below the combo disqualified buy risk, which is at 1854, had a close of 18.51. And the combo and sequential buy risks are not in danger of becoming qualified or anything as of yet. So for now, the risk levels are acting as support and resistance. And I watched price action and VIX action in the end of the day near 4 o'clock Eastern time, and I saw the price continuing to move up and traders and investors buying protection in the form of puts as the VIX started going up. You can see it had a low of 17.97, and then as price was going up in the S&P 500, protection was sought. And here's the convexity shares 1x spikes future ETF SPKX daily chart. Looking back to its inception back in August of 2022, and did really nothing for a while. Did spike up, and then the rest is history. I'll zoom into this current area now. And there's an aggressive combo buy countdown 10 and an aggressive sequential buy countdown 9, about to print 13s pretty soon, and a sequential buy countdown 9, combo buy countdown 9. I'm going to have to switch charts now. And here's the SPKX in a different chart, because it shows the 100% disqualified propulsion exhaustion down and not the sequential aggressive buy countdown 9 from the other chart. So a little different, about the same though. This one has the DeMark 1, REC, and REI also. And SPKX closed at 1713, and this 50% propulsion disqualified exhaustion down is at 1708, so it closed a little bit above that. There's no danger in getting this level qualified anytime soon, as there has been nothing but down closes. So knowing what we know from the CBOE total put call ratio chart, and if it really does go back under that line that I pointed out a little further down, the KST, then this might go down further, and I don't see any harm in buying some either at the open or on the open, around the open for Monday, if it doesn't skyrocket too high here. Actually, if it goes down even better, I don't see any harm in buying into it down to about 16, let's just say halfway between the 100% and 50% propulsion exhaustion downs, somewhere right in there. So maybe start buying 5 at a time, and then every 20 cents or so, 25 cents, maybe not even that high, 15 cents. Every 15 cents that it moves down, buy into it another 5 or 10, whatever your risk tolerance is, and see what happens when it starts approaching 16. And if that put call ratio KST makes it down under that line that I pointed out. And the up wave has just started. It's been traveling down in a mechanized fashion as it's supposed to, from maybe here or here. I don't remember. Video the other day pointed it out. And all this irrational exuberance is flying right into the central bank meeting starting on Tuesday in the Powell presser here at 2:30 p.m. Eastern Time on Wednesday, February 1st. So, yeah, that's going to be interesting to see what he says. And it's always very colorful. I just don't expect him to have any dovish tone at all, and I'm sure market participants will misconstrue whatever he says to the upside. Maybe not right away, but eventually there might be a gut punch and knock us down to the knees, and then maybe we can get into this, I don't know, it might start skyrocketing. We'll have to play it by ear and see what happens on Monday morning. The US dollar daily candlestick chart shows it holding the line here at 101.42. It's in a consolidation pattern, and if it breaks this 102.42 to the downside in a significant manner, closing under this line would do it for me. And it's down to 99.84 in a hurry. Break that, and it's down to the double bottom here, 97.71 and 73. And Martin Pring's dollar diffusion indicator here shows it making a pattern near this bottom, similar to maybe over here a little bit, and maybe here, where it ticks up and then down, has a bit of indecision, and then eventually heads up. And it did tick up near the end of the day Friday along with the VIX, so protection was sought near the end of the day on Friday. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily horizontal support from 040721, the pivot point, and the weekly diamond bottom uptrend extension. And price in the aftermarket hours for Friday ended at 40.69. So to the downside is S1, the monthly 12 simple moving average, and the downtrend line from 0603-2021. And to the upside is the daily high channel 3, just a target actually, the daily Bollinger Band upper band, and R1. And this level up in the 4100 range was close enough, so this is where we get the new higher high here and print the D wave up wave 5. And the NDXT lagging line closed at 6530.60, and you can read about the NDXT here. And importantly, Tesla is not in there, but I group all the big fat mega tech together like that. And I've given a new level for the downtrend line underneath price here. And this is the top of the diamond pattern. See the previous video for that. We'll go take a look at where that's at now though. And that's right about here, 61.59 or so there. And the NASDAQ 100 NDX daily AD line is getting further away from its 21 EMA signal line. And the S&P 500 daily AD line is still in good shape, well above its 21 EMA signal line. And the S&P 500 12-month forward price-to-earnings ratio bumped up to 18.29, and the S&P 500 trailing 12-month PE ratio bumped up quite significantly to 19.72 from 18.92. And both of these ratios are now above the historical highs for PE ratios and well off of the free money era. I think they were up to high 30s, low 40s for the forward earnings, and even worse for the trailing 12-month. So they have come down significantly and are now at above historically high numbers. And the big three indexes were skyrocketing all over the place. However, the New York traditional McClellan breath oscillator bumped down a little bit from 25.85 down to 23.78. So it would take 2,378 decliners over advancers to get back to zero. Have a great day.